Mr. Kumar Rajagopalan. He's the CEO at Retailers Association of India. Hi, good to be speaking with you, sir. Just to begin with, is there any improvement in the consumer sentiment on the ground? Because the festive season didn't start well, but at least is it ending better?
Yeah, good morning and season's greetings to you. I think for most part of this financial year, we had seen that growth was around 4 to 5%. So when you look at that and compare with what we've got for October and November, it definitely looks much better. It looks like 7% growth. And of course, our expectations were that we'll do about 10% or so. It is definitely an improvement. Also, there are some categories that has done well and which are indicative because jewelry is done well. Garments is kind of sustained at around 7, which was otherwise a stressed sector in some form. And then, of course, food and grocery is done well overall. So those are the things that has done well. In terms of categories that were expected to not do too well and have not done too well are things like furniture, fixtures, etc., which I guess would kind of pick up in the next 1 or 2 months' time, because as people start spending money in their houses instead of on themselves alone, it will get better.
Mr. Rajagopalan, this is Shrishti also joining in. So you did highlight some of the sectors that didn't perform well, but help us understand your outlook for the retail growth in the upcoming months, because the festive season sale is still underway. We have the Christmas and the year-end sales going on. So what is the on-ground situation on a YY basis? Are we witnessing any bit of an improvement?
Well, the YOY is definitely growth, but most parts of the growth have also come because many of the retailers have expanded their reach. Many of them have become omni-channel retailers, and therefore their geography is increased. So that's where the things have come in. Would we expect a better season? Definitely. I mean, all of us can't be in retail unless we are optimistic about the future. We do see a bit of a stress in the consuming class of the population. I think that has been the theme through the year, where low price point items, value segments, have not really shown healthy growth at all. It's in some cases it's shown negative growth. In some cases it's kind of just about grown better. We would want the consuming class of the population, the lower middle class population, also to join in and show the confidence for the economy. That's when the whole thing will get better for all of us. The premium segments have done well through the year. It's continuing to do well. The upper middle class segment is also doing well. So we'll have to wait and watch. We would like a 10% growth because it's not as if the last year, January, February was any great. So hopefully it should look better for all of us.
Classify a little bit more, where is exactly, Kumar, are you seeing inflationary pressures at play? Which categories of consumption? And, you know, like you said, which income strata as well is facing the heat most?
Yeah, the income strata, like I said, that's been facing the most amount of heat is the people in the lower middle class segment and the bottom of the pyramid. We do know that the cost of inflation for them from a point of view of non-discretionary, which is predominantly food, grocery, etc., has seen the highest amount of inflation since the last 2.5 years' time. So that's kind of putting a dampener for them to go out and buy other discretionary products like garments and jewelry, etc. They did come out and shop during Diwali. In fact, if you compare this time Diwali versus or Dashera Diwali versus the last year's Dashera Diwali, we had seen about 10% growth. But that got muted when we combined the October-November data, because that's where it's now come down to 7%. We hope festival season and more importantly the marriage season will hold good. The other place that we think things are also not very easy is also jewelry. I mean, if you really look at the pure cost of buying fine jewelry, it's definitely gone up. And that means that while there is still value sales, the quantity sales are not big enough, because again, the people in the lower middle class are not able to come in and buy at the prices that they are in. Inflation also hit garments, and that was seen as a category where people would have liked it to be much cheaper, and people have really restrained from shopping enough. We'd have liked garments to be the indication for how cheerful Diwali has to be. It's not as cheerful. It's not bad, but it's not as cheerful.
Not as cheerful. But Mr. Rajagopalan, one of the big trends of 2024 was, of course, the disruption from quick commerce. And I mean, companies like HUL now have to, take direct to Kirana's distribution route. That's what we are reading in the papers this morning, that even the incumbents have to redesign their entire supply chain. What do you think is going to be the big theme to watch out for in 2025 for the retail and consumption sector?
That's a good question. Actually, I've got two views to this. One view is that while everybody is talking about quick commerce and just like 2 years before, everybody was talking about online, the real share of this whole channel in the overall market is still very, very minimal. So if we are saying that the economy does not look that good for the retailers because of quick commerce, I think that's not the right way to look at it at all. Because the fact is that it's so small a percentage, it does impact the bottom line, but overall it's okay. It's about 3-4% difference. The theme, of course, is that customers are now looking at convenience from a new eyesight or a new viewpoint, because they're looking at things to become faster for them, and speed is, of course, useful because most of us as consumers, once we make up our mind that we want something, we'd like it pronto. And quick commerce is the nearest to the pronto that can happen for everybody. So it's definitely a theme to look out for. Also, the way people will predict for customers, the way people would start working with individual customers, the way personalization is happening in the market is completely getting changed. Thanks to the fact that customers expect personalization. I do not want to be given offers that's not relevant for me. And if I do get that offer, I'd immediately put them into my junk bin, is the way in which most customers are reacting. The other point, of course, is that customers are wanting to ensure that they get the best of fashion, the latest trends, etc., if they are going to buy a slightly higher price. And there, things like AI is definitely picking up for many. We hope that for the retailers who are now in the not so technology adopted kind of segment, they would use things like ONDC to really be in a position to showcase themselves to customers 24/7. Their relevance to the local customer is not lost. People would still like to buy from their trusted retailers. That is very clearly evident. But it has to be augmented with the ability to be able to access 24/7. So we think smaller retailers would definitely look at WhatsApp and various technologies that would help them, and ONDC to help them in augmenting their online capabilities. The slightly larger retailers and omni-channel players would definitely look at how can they get faster, better, and more trusted with their consumers.
Fair point made, Mr. Rajgopalan. It's the convenience that is mattering the most at this point in time, and specifically in the urban areas where the reach of the e-commerce as well as the QSR players are better at this point in time. But also help us understand that how does the rural and the urban areas differ in terms of the retail growth? What kind of a contribution are you seeing from the tier 2, 3 and 4 cities?
That's actually this year, the tier 3 and tier 4 cities have really come up well. We are seeing that those consumers have become much more active. They are able to see items across categories. They are also using technology in various forms, because technology is not anymore just an urban criterion. It's available to everybody. Everybody is on WhatsApp. Everybody is able to access data in various forms. And we are seeing that customers, even the tier 3, tier 4 cities, are wanting to be as fully enabled for access to products and services as it is for tier 1 and tier 2. So the tier 3, tier 4 businesses that were set up were all doing quite well through the year. I mean, the growth has been at least 2 to 3 percentile points more than the urban businesses for many of our retailers. Having said that, the big chunk of business is still the tier 1 cities and the tier 2 cities.
Okay, Mr. Rajagopalan, so good to have you on the show today, and here's wishing you New Year greetings from all of us on the channel.
Thank you, and Happy New Year to all of you. Have a good time.
Right, thank you. Okay.
If you like this video, then like, share and subscribe to ET Now.